The U.S. is short 7.2 million homes. Now, that may seem like a big number, and that's because it is. And the gap's been widening ever since 2012 when we officially started to recover from the global financial crisis, or the 2008 housing crash, as it's known to folks online. But of course, the devil's always in the details. While we know real estate is local, there are financial markets even within your local market. And one market I always talk about is the bottom of whatever the housing market is in your area from a price point. Because honestly, there's always going to be $1 million homes, and there's going to be less competition for $1 million homes than they are for $400,000 homes, because everyone that can afford $1 million home can afford a $400,000 home. But if you can afford a $400,000 home, you can't necessarily afford a $1 million home, obviously. And so the starter home, which is now a $400,000 home, apparently, is starting to slowly disappear. So we're about to get into those details. But first, if this is the first time hearing the sound of my voice, my name is David. I have a background as a mortgage underwriter, a mortgage lender, and a realtor. So yes, that is the entire home buying process. I've also purchased multiple homes myself, but most importantly, I've helped hundreds of people just like you buy their first home in real life. I don't just talk about it on the internet. And let's go get those keys. Jingle. Welcome back to House Rich, the first time homebuyer show where we provide you actionable steps in layman terms to buy your first home. Let's get right into this 7.2 million home deficit. And the reporting is from Realtor.com. So here's what they have to say for themselves. The U.S. is in a long-term housing shortage, with the construction of new homes failing to keep pace with growing population. While a recent uptick in new construction has the potential to alleviate the historically low levels of homes for sale on the market today, it's going to take some time to close the gap. And that's from Chief Economist Danielle Hale at Realtor.com. And so I want to frame that around the lock-in effect that we've talked about. So that's basically folks that have a low rate they got basically pre-2012, like maybe in the sometimes the high twos, but really the threes and low fours. Because even prior to COVID, rates were in the fours. And now those folks that may have been looking to upgrade or downsize are just going to stay in their home because it makes the most financial sense. For example, somebody that may have been looking to upgrade to a bigger property, they're like, okay, maybe I could have stomached a $500 or $1,000 increase in my mortgage, but now with my rate going from 3% to 6.5% or 7%, that increases now $2,000, $2,500. So that doesn't make sense for us financially. We may have less space. We had another kid, but hey, the kids can stay in a bedroom together now until rates potentially go down in the future. And the same thing for people looking to downsize. Like the whole thing with downsizing is you move into a smaller home, you sell your home, you use some of the equity to have that smaller payment for the later years in life. But once again, going from 3% to 7%, you're going to a smaller home, but you potentially may have like the same or a higher monthly payment. So they're just going to stand pat. I mean, wouldn't you do the same? But Hale does have some positive news for folks potentially looking to buy in the future and rent. That said, the elevated level of both single-family and multifamily construction coming on the market this year is likely to put downward pressure on rent prices in many markets. It also means that a higher than usual new homes for sale is likely to continue giving home shoppers willing to consider new homes more options. And the reason new home sales have been so big the last year and a half with rates being so high is that builders have crazy margins. For the most part, in a good market, builders can make like 25 to 30% on the sale of a home. And that's over the course of, maybe the 6 to 12 months it takes them to actually build the home. When you or I, of course, we buy a property, we're not making 30% returns in 6 to 12 months, despite what you see people claim online. And also, like, the builders are in the business of selling homes. So when rates go up, they have to incentivize you or I to buy homes. So let's say they were going to clear $100,000 on a home. Well, they'd rather give you an additional maybe $15,000 or $20,000 for upgrades on the property, or to buy down your rate to make the payment more affordable. They'd rather sell 10 homes in a month at a 20% margin than sell 4 homes a month at a 30% margin. It just makes more sense for their bottom line. Now, let's break down where they got that $7.2 million number from. So, in 2023, an additional 1.7 million households formed, resulting in a total of 17.2 million new households between 2012 and 2023. During that same time frame, about 14.7 million homes were built, but only about 10 million of those were single family homes. I'm a realtor in Dallas and would love to help you reach your goals of home ownership. So click the link in the description and just schedule a call no matter where you are on your journey. Not in Dallas? No worries, I can help connect you with a vetted realtor in your local jurisdiction as well. And feel free to share with friends, family, and foes. Everyone gets love. The gap between single-family housing starts and household formations grew from 6.5 million at the end of 2022 to 7.2 million at the end of 2023. So that's what I talk about when I say this gap is widening, and there's no real sign of it looking to decrease. So if you think about the basic concepts of supply and demand, the supply is not increasing at the same level of demand. The demand being more people being created, and there's always going to be a demand for people wanting to own a property. Ever since the first cave or tent or hut or mud hut was built, people always want shelter, and they want their own shelter. Everyone wants to argue, is this a asset or liability? People want to own the place they live historically, because when you own some place, you get to live where you want. When you rent, folks are just allowing you to live there, and if something changes, you could potentially be in a disadvantaged situation or having to move, rent increases, etc. Now here's a very important stat. In 2012, just 38% of new homes were sold for less than $400,000. However, in 2023, the share increased to 43%, indicating a shift towards more affordability in the new construction space. Now, this may seem like a great stat, but it's actually what you don't see that is very important. This stat used to be for $300,000 homes. It used to be in 2020, it was like 38% were 300,000. Then in 2021, it was like 20%. Then in 2022, it was like 11%. They've just got rid of the $300,000 stat because I assume that's in the single digits now. So while they're an increase in $400,000 homes, the obviously more affordable $300,000 home is disappearing, and builders are not building those anymore. And that's why I pointed this out at the beginning of this episode, that it really matters what financial bracket you're in, because if you can't afford a $400,000 home, who cares that the inventory is increasing at that level? And the inventory at the bottom of the market is decreasing and or disappearing, especially in like the $200,000 range. This is the area of the investor and the flipper who now takes the $200,000 home that needs a little bit more work. They put some new carpet down, they slap a new shade of paint on it, and now that $200,000 home is now $250,000. That $250,000 home is now $275,000. And that's why those homes at the bottom of the market are disappearing. So I've never wanted, of course, to be fair-mongering and say, hey, you need to buy a home, because of X, Y, or Z. But just something to note, if you're at the bottom of the market, like the home that may be a little bit hard on your budget right now, it's going to be a little bit even more harder, next year or the year after, unfortunately, in my humble opinion. Of course, I cannot predict the future. Of course, real estate is local, and these are national numbers, but Realtor.com pointed out the metros with the biggest gaps happening in single family housing. They said the metros with the largest single family gap include the San Antonio, New Braunfels area in Texas, the Austin Round Rock area in Texas, Daytona Beach, Oman Beach, Florida. Is that a place in the world? The top 10 list of metros by size and gaps relative to population includes 3 metros in Texas, 5 in Florida, and then 2 in Washington, where it looks like a lot of people are moving for one reason or another. So what does this mean from a big picture? In my opinion, it means that if in your local jurisdiction it's hard to find a home that you can afford in your price range now, it may be a little hard to find a home next summer and the summer after, because all the data and the information shows that the availability of single family homes in relation to the people looking for homes is widening. So make sure you're formulating a plan sooner than later, right? So make sure you're working on your budget. You know what your budget is, you know what you can afford versus qualify, and that you have your goal set when it comes to finding a home, so that if the opportunity does come, you can pounce on the home. It's always better to get started on your home search sooner than later. But let me know what you think. But as always, buy land. Rumor has it they're not making any more of it.